Hello, everybody, and welcome to the Trading with Ashley show. Just like the title shares with you, I was able to triple my 401k account in 3 years, and I am about to share with you everything I did and how you can do it too. As most of you know, I left corporate America after working there almost 30 years so that I could become a professional trader and trade for a living. It has been wildly successful, and I love teaching others how to do this. Now, many of you have 401ks, and many of you have money with the big box brokers, and I'm sure you're wondering, can I do better? Well, I'm going to show you how I took my 401k at the time that I converted it over under my control. It was around $575,000. I'm going to show you what I did to actually transfer it so I didn't have to take a tax hit. And then I'm going to show you the strategies I used to turn that $575,000 to almost $1.9 million in 3 years. I just hit the 3-year anniversary of taking control of those funds, and I have done so much better, outperforming the S&P year after year. And I want you to be able to do this for yourself as well. And it's not just me, it's my students as well. They are making life-changing money knowing how to properly trade. And lucky for all of you that are watching this, I actually just opened up some spots in my Mastery Options Bootcamp so that I can take my students step by step through the exact process that was able to triple my wealth in 3 years. Now, this bootcamp, it's for serious students. It is an investment, but it is an incredible investment in yourself because I teach you everything in logical order that, quite frankly, I wished I had had that kind of support when I decided to actually trade for a living. Now, I only offer boot camps a few times a year, and my classes always fill up. So if you're interested, you do want to click the direct link below and book a call so that you can inquire about the cost and determine if this is something that you actually want to commit to. For the rest of you, let's jump into the computer. I am going to show you my exact account. I'm going to show you the amounts that I rolled over at the time that I did. I'm going to show you the appreciation that those accounts have enjoyed over the last 3 years. And then finally, I'm going to show you the strategy that I actually used to grow the accounts from 575,000 to over 1.85 million. Let's start with looking at my actual account over the past 3 years so that you can see all of the details. These are my retirement accounts. It's a combination of a 401k and an IRA. Over the last 3 years, September 1st, 2022 to September 19th, 2025, I have been able to generate a 219% return on my money. And here's the details right here. If I click Show Values, it shows you what makes up this $1.8 million. You can see right here, this is the contributions that I made. This was my 401k, $575,299.51. The sad truth is, it took me 28 years to build up this account. And in 3 years, I was able to turn it into over 1.8 million. Here you can see that the interest and dividends, they were about $10,000 of what you're seeing in the 1.8 million. But this is what I am most proud of. It is the appreciation of $1.2 million. I was able to create that through my strategies. It's really exciting when you take control of your own money and you can create your future. Now, if you'd like to see a little bit of how my returns have performed over the past couple of periods, this is the 1-year mark, September 1st, 2024 to September 19th, 2025. You can see it's 130% return. Let's see how I've done on the last 3 months. Last 3 months, I've had a 32% return from June 1st, 2025 to September 19th, 2025. And year to date, I am proud to say I am up 51%, looking at January 1st, 2025 through September 19th, 2025. My account has gone up $628,000 in 9 months. What's so amazing to me is this is higher than the amount that I started with, and I was able to produce that in 9 months. And you have to consider this also included all of the drawdown that we saw at the beginning part of the year. This shows you the values. You have 1.2 million that I started with in January of 2025. You have interest and dividends of $846. I haven't withdrawn anything and I haven't added anything, but the appreciation is $627,000. Now let's look at the actual accounts themselves so that you can see the amount that I transferred back in 2022. Here you have my Roth 401k, and I moved $215,000 over under my control that year. In here, you see my traditional IRA back in 2022. It was valued at $385,000. I was able to transfer this over that same year. I took these funds, and of these funds, I rolled over $575,000 into the accounts I just showed you. Now, one thing that's great about when you are transferring funds, you can actually call the broker that you're using. In this case, I used Merrill Lynch, and they will help you with the transfer so that you can ensure that you don't pay unnecessary penalties or taxes. The trick for me was not taking control of the funds in my own bank account, but actually doing a direct transfer. So basically what I did was I sold all of the mutual funds that I had invested in. And by the way, I was in the aggressive portfolio growth at the time. I consolidated all that, and then I transferred the cash over to the broker to begin my journey of being able to trade for a living. Now, what if I had just left my money in a 401k and I did not learn how to trade and I just left it there to grow at the annual compound growth rate? Where would my money be today? Well, let's compare. So here you see my portfolio starting value was $575,000. Under my management, I was able to grow it to $1.85 million. That is a 47% annualized return. The same amount of money in the S&P, well, it would have been a total of a 55% turn over the last 3 years, which is a compound annual growth rate of almost 16%. As you can see, I am significantly outperforming the market, and this is what I do, and this is what my trading community is all about. And it's not just me, it's my clients as well. So this gentleman, we love having him in the community. He's very active. He actually was a financial advisor when he came to me. Let's take a look at his account after he took control of it and learned how to trade. His current value is $1.2 million. Very proud of him. This is where he started with me, right here. It was in 2024, and I still remember our first conversation, and I remember his goals and his dreams. Well, together, after he learned how to trade, look at what he has been able to do. This is the dip that happened when everybody took this together, but I helped him through that, encouraged him to stay the course, and now look, just a few months later, he is hitting new highs in his account. And look, this is one of my really sweet bootcamp members. I remember when she joined me. She has gained over 100,000 and her husband has even more. This is after she learned how to trade. And here's my sweet member, Diane. She was in my most recent boot camp. She's reporting that she has over a 30% return already this year in every single one of her accounts. And then I always like seeing these messages. This is your return on investment. This new member is sharing that they have already fully reimbursed their lifetime membership with me in 1 month from learning how to trade. So what is it? What strategies have I actually used to grow my wealth? Well, there's a combination of strategies. Let's start off with the strategy that is about 80% of what I do every day in and day out, and that is the wheel strategy. The wheel strategy is great because it's conservative in nature and it slowly but steadily builds your wealth. Plus, you can be right in a variety of scenarios. That's what I love so much about the wheel strategy. It starts off with selling puts. Now, you have to have the amount of cash available to actually purchase the shares at the strike price that you select, but you are getting paid in premium every time you sell a cash secured put. Now, how can you be right in so many scenarios? Well, what is the potential outcome? For one, you could have that put that you sold expire worthless. What does that mean? That means that although you agreed to buy a stock at a certain price, it actually closed higher than that price. That means that you get to keep 100% of the premium, and then your funds get released to you to sell additional puts. Well, let's talk about if it actually goes down a little. If you've sold a put and the stock retreats a little, just a little. Well, if it doesn't reach your strike price by expiration date, you still win. You get to keep 100% of that premium. Now, what happens if the stock goes down a lot and it actually goes past the strike price that you selected. Well, in that scenario, you could either roll the trade or you can do what I like to do and take ownership of the shares at the strike price that you agreed to. When that happens, then all you have to do is sit and wait. You want to make sure it's a quality company from the beginning, but all you have to do is sit and wait. Then you allow that stock to move up. When that stock moves up back to the price that you purchased it at, now you start selling covered calls. This is such a big part of the wheel strategy. As a stock rises, your wealth is starting to grow. Then I teach you exactly where you want to exit your trade. You sell a covered call at that point. If your shares are called away, now you have growth, not just from the premium that you got from the sold put or the premium that you got from the sold covered call, but you have everything in between, all the appreciation. And that's really the magic of the wheel strategy. And that's where most of my income comes from. But we can't forget the other strategies that help give me the outsized gains. I love to trade leaps and skips. So in my bootcamp, I go through my entire process for selection and exits. Another strategy I like to use is credit spreads, but I am very conservative when I use credit spreads. Credit spreads are a directional bet, and what that means is if it goes in the wrong direction and goes through my strike prices, I could lose 100% of the money I put up for the trade. But the reason that they're so popular is it takes a lot less money to actually make the trade, and the return is really high. So there's a place for that in our portfolios, in our growth, but I keep it a very small place as to not risk too much. I always say it doesn't take a lot of money to make a lot of money, as long as you use risk management and you're conservative with the amount of money that you put in the trades. But because the wheel strategy is the biggest part of how I generate wealth, I'm about to show you exactly how to sell a put, and once you're assigned the shares, I'm going to show you how to sell a covered call. Now, stock selection when you are selling puts, it is such an important part of the equation because you want to get stocks at a fair price. That ensures that if you're put the shares, you can enjoy the stock appreciation. You also want to make sure you're in a quality company, especially if you are dealing with funds like 401k funds. So let's analyze AMD. It's at a spot where I might not mind actually selling puts. If you go to the analysis tab and you check out the stock that you're about to sell puts on, you want to make sure it's a profitable company. Well, look, we see right here, it is definitely a profitable company. This is the revenue that you see right here, and this is the earnings. So they are making money. That's great. It also has a decent price target of $185, and it's also rated a buy and a strong buy. All of these things help to increase your chances of success. Next, let's check out the technicals to see what is a fair price to actually get AMD. Well, the first thing I like to do is I like to go to a chart like Yahoo Finance. I'm on the 3-month chart. The first thing I do is I look right here at the RSI. Now it's under 50, which means there's been more selling pressure than buying pressure. But that's okay because remember, I want a stock at a really good value. So let's look at what a good value would be. Well, anytime we're under 50 on the RSI, I like to shoot for the bottom of the band. So that's right here about 150. We're not too far off from that now, so I bet I can get some pretty good premium if I sell a put at the 150 mark. Let's go do that now. Once I get to my brokerage, this is Robinhood. I want to do trade AMD options. Now you can select the expiration date, but for this example, let's go to October. We're going to go to the third Friday in October. You click sell, put, and if I'm comfortable owning AMD at 150, let's go and look at the premium. Here's that strike price, 150, and look, I will receive over $400 for putting up $15,000 and agreeing to buy AMD if by my expiration date it dips down to 150. The beauty of this is I get to keep this $400 regardless of what happens. So I may be lucky. I may get my shares at around 150 and keep the $400. That's part one of the wheel strategy. Now, let's go look at another popular stock that I bet many of you have. Now, this one, if you have 100 shares, this one is ripe for selling covered calls to generate income. Now, I do have a lot of SoFi shares. I have a lot in my buy and hold account, but I also trade SoFi because it generates great premium. So, in my trading account that I use to generate premium income, I might be ready to sell covered calls on SoFi. Well, what shows me that maybe it's time? Let's look. I'm on the 3-month chart. Let's look at the RSI. Right now, that's 73. Well, once you're over 70, that means that the stock will more than likely pull back in the coming days or weeks. Let's look at placement of the Bollinger Band. Look, we are outside of the Bollinger Band. This is a perfect spot to sell a covered call because just like you wanted a fair entry on AMD, you want to sell your SoFi shares at a fair price. And you want to sell them at a price that ideally you'll be able to pick up the stock even cheaper than what you're selling it at now. That's the beauty of doing the wheel strategy. So if I were to sell a covered call on SoFi based on everything I'm seeing, I might shoot for something around $30. I'm okay if I got the stock at 15, selling it for 30, knowing that if it's called away, I could then regain my shares either through purchasing directly under 30 or selling cash secured puts at a lower amount once the stock retreats. So now, assuming you're ready to sell a covered call on SoFi, let's go to my account and do Trade SoFi. Once you get to the option chain, you want to select Sell Call and choose your expiration date. But unlike when I sell puts, I only really like going out 1 week when I sell covered calls. Because if it does surge past my strike and I want to roll, I don't want to have to roll out too far, and that keeps my money tied up longer. So I'm going to choose 1 week from now. And I did like that $30 strike, so let's take a look at it. Look, you can see right here, if I were to sell it, I would get 73 cents a share. So $73 for agreeing to give up SoFi at 30. Well, if I purchased it at 15, then I get $15 stock appreciation plus another 73 cents. But in this scenario, you can clearly see the benefit of being put the shares lower and selling them in profit. The vast majority of the growth is going to come from the $15 to the 30. The 73 cents is nice, but the bulk of where I make my money is being put the shares and letting the stocks appreciate. I hope this motivates you to learn how to properly trade and take control of your own money. After all, nobody is going to pay as much attention to your money as you. I would love for you to learn how to properly do this. Remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, if you want to watch another video that I did to help those that are wanting to retire, well, you can watch that video right here.